Let's get some perspective now from one of Bloomberg's best economists to make sense of these numbers. Dean Maki's with us. He's chief U.S. economist at Barclays. Joins us from their floor there this morning. So, Dean, how do you read this non-manufacturing ISM figure? Is it a sigh of relief?
I think the way to interpret it is that we are continuing to see growth in the service sector, actually a bit of a pickup in growth in July. What this does is it makes the fears of a double-dip recession look even more remote than it did before the number. For that to happen, you would really need firms across the economy to start cutting employment, and that just looks very unlikely when firms are actually seeing growth in their sales. And the employment index today rose to the highest level yet of this cycle.
Well, on the earnings front, there's been such hyper-focus on top line perhaps not being as strong as some would like. But from this read today, it looks like the mood of businesses is a little bit better than expected. Tell me about the job creation question in here. What does the employment read from today's figure tell you about what we can expect on Friday?
Well, there's not a direct one-to-one correlation here, but I think the general move upward in this index is telling us we should be expecting the service sector job growth to keep improving. We have seen it move from sharp negatives to moderate positives. We think on Friday we see another leg up in the service sector hiring.
Another leg up, but not enough from today's report to make you perhaps boost your expectations?
That's right. The correlation is not high enough to really make us change.
Talk to me about housing because, with yesterday's figures and the latest read on pending home sales, there is that concern about a double dip. You just said that's not going to happen, but talk to me about why you think housing is contained from spilling over into the rest of the economy at this point.
Well, I think it's important to realize what's happened in housing. We had the homebuyer tax credit that really boosted sales in March and April, and inevitably sales were going to fall off in May, June, and perhaps even July. That's really not a worrisome development. That's just what one should have expected. The other thing to keep in mind is that home sales, housing starts are at such low levels right now that they really don't have far to fall in terms of really causing a lot of economic destruction at this point.
Well, what about prices there? And price dropped off, particularly in regions of the country that are still struggling, like the Gulf Coast area where the prices of homes are getting hit right now.
Sure, there's some uncertainty around the home price outlook. What we've seen is that home prices have stabilized over the past year after falling sharply the previous couple of years. We think they'll broadly move sideways going forward. But as long as prices don't go back into the free fall that they were in a couple years ago, that shouldn't cause a lot of pain to the macroeconomy in general. Prices aren't going to boom, but we think they'll be in roughly a flattish mode going forward.
Fair amount of anticipation about August 10th and the latest read from the Fed. Is there anything that moves the needle for you coming out of the commentary next week?
I think the real interesting question here is whether the Fed feels they need to do more on the asset purchase front, in particular to start reinvesting some of these securities as they prepay. We don't think that they'll be doing that next week.
Reinvesting into treasuries or mortgage-backed securities, as the Journal reported yesterday?
Exactly. That is one suggestion of what might be considered. While I'm sure that will be discussed, our view is that the Fed is likely to keep the status quo for now. They still think this is a moderate recovery, that there's not reason yet to be concerned about a real turn into very weak growth. And as long as they hold that view, there's no reason to continue to expand new policies.
But they may gesture towards consideration at this point?
I don't think that we'll see that in the statement itself yet. It's something they may consider if things weaken down the road, but probably not next week.
All right. Dean Maki joining us from Barclays this morning.